So today's webinar, it's titled Creating Accounting Service Packages and Pricing Options. This has been, I would say, the toughest part of my journey in value pricing, which has been figuring out how to put packages together, how to book the service options so they are attractive to our clients, and that as an accountant, where that the pricing is justified. That's one of the really biggest struggles that most accountants have is, hey, how can I justify my prices? How can I make sure that clients feel that they're getting a fair price because we are charging a fixed price, and the fact, and are we charging enough for the risk that we're taking for charging a flat fee and not charging an hourly rate. So with that being said, I'm gonna go ahead and kick it off with a quick polling question that's gonna help me get an idea more or less of where you are in your value pricing stage. So have you implemented value pricing? Has it been successful? Do you still kind of have a ways to go? Have you not done it yet? You're working on it. You're probably not gonna do it, or you don't even know what value pricing is. So one thing is this is not a basic value pricing course. I've taught 2 or 3 value pricing courses in CPA Academy, so I encourage you to take a look at the archives of that. This is more of sort of an advanced course. This is for folks that have already bought into the idea that they're going to charge a flat fee, a fixed fee, not a monthly fee. So we are, for the folks that are watching live, we are. I'm hoping that you're at the stage where you have already decided that you want to not charge by the hour, that you want to charge a flat fee, and you're looking for ideas on how to present this flat fee in a way that you can get the most out of the customer while the customer gets the most out of you. So real quick, while the polling question's still up, for the folks that say what they're asking, what is value pricing? It basically means to price your services commensurate to the value you're providing to your customers, which means you have to go in a deeper journey to understand what your customers want, what your customers need, and what are the things that you do that actually provide value to the business and their lives, and price accordingly. That's in a nutshell what value pricing is, but at its core means don't bill by the hour or don't charge by the hour, price up front. Okay, let me go ahead and close the polling question, and just for the sake of sharing the results, so we do have 11% of you that have implemented value pricing and feel they're very successful, which is great. So hopefully I'm showing you something new. We have 27% of you that feel that they have a good ways to go, which is great. So I hope that the stuff here gets you much closer. 9% of you, will probably stick with hourly pricing by now, so you probably won't get as much value out of this as possible, or maybe I'll convince you somehow. And 38% of you are working on it, and a few are still discovering what value pricing is. So for the folks that are still discovering what value pricing is, my suggestion would be go ahead and check out the archives from CPA Academy to see other videos and webinars about that. Okay, let's talk about the table of contents. So we'll talk about what I feel are the basic components of pricing options. And I put together my own spreadsheet. So I'm going to show you how I put together my spreadsheet. And what I'm encouraging you to do is to build your own spreadsheet, build your own template. At the end of the webinar, I'll show you, what resources I have available for other accountants to download. And I do have some in-depth resources that I charge for. But for the most part, this will help you put together your own pricing option spreadsheet or template if you need to. So that's going to be the introduction. Then we're going to talk about scoping options, and I make a big differentiation between scoping and about the scope and service delivery, and this will all make sense once you see my methodology behind that. And then we'll kind of open up my own spreadsheet and show you how I put that together. And at the end, I'll give you some links to some free downloads and some optional in-depth resources. So the first thing is let's take a look at the visuals and why I feel that this is an effective way to present your prices. First of all, notice that on the left-hand side, I put the word fixed price. It is part of the stigma of the accounting business. So by putting the word fixed price, flat fee, fixed fee, something like that. It just really calls out into exactly what you're doing, right? Um, so if I want to make sure you can see my screen where you see the graphical. Yeah, so it looks like we can't, for some reason you weren't seeing it before. So you notice that we have a good title. I also put the client's name always on that presentation sheet, and I limit it. Notice on the left hand side, I limit the pricing for 30 days because circumstances can change in both sides, right? Your customers may have a change in their business that makes the circumstances of the pricing change, and we may have a change in our business, right? Because if we price a service in July, we may not be as busy as pricing a service in February, and it's only natural that the prices could change. So putting that expiration date on the pricing, to me, it's just really important. The other pieces is I name my packages. I give the service a name. So I'm giving this one outsourced bookkeeper as the first line. The second one I'm giving it collaborative bookkeeping, and the third one I'm calling it strategic accountant. Now this is not the same across all the customers. This could vary. It's okay for this to vary. This is just the most generic one that I use. Then I give each of the services a description that lets the client paint a picture of what that service will feel like, right? So outsourced bookkeeping, notice that we'll do it for you monthly, right? That's what it will feel like, right? They're going to take care of the stuff that I normally would do monthly. My accountant's going to take care of that. Collaborative bookkeeping, we're going to do this together in real time. And one thing is, and this is a barrier perception that I have to break right away. And you guys, if you're an accounting professional, so you will understand what I mean by this, is a lot of clients think that when we work together, it's less work for the accountant, therefore it should be less expensive. But I make sure that I make that presentation right away, immediately, that no, if I take over the work and you don't touch it, it will be one price. If we're working it together, it will be a higher price. And this is where you get always a customer saying, wait a second, how come I'm paying more when I'm doing half the work? Then that's when we start talking about, well, it's not just about doing half the work, it's doing more things that are not related to what we call cash basis write-up. And then we get into having controls of accounts receivable, accounts payable. That's all part of the value conversation. We'll get to that questionnaire and how that's framed. But that's just a really important initial framework. Is hey, working together is going to be more expensive than working than just me doing it 100% on my own. Now also notice that I always add the one-time fee option, right? Which is whenever we're in the middle of the year and I cannot help you with your monthly bookkeeping services until I clean up the remaining of the year, until I make adjustments for the beginning of the year, until I reconcile your banks up to September, whatever happens to be. So depending on the service option, I also charge a different fee for that cleanup work, and I reward my client as they go higher and higher in my tiers to pay less for that one-time cleanup. So we'll get into that, but I just wanted to kind of give you a quick introduction in terms of my philosophy on presenting prices, and hopefully just this by itself gives you a good idea on how you want to do it on your own. The other piece is I split the scope and the service delivery as two different areas, as two different features. So what I like to call scope is the specific things that I'm going to do, what the customer is going to see as the end result of the work. And the service delivery is how the customer is going to perceive or experience the work that I do. So we'll get into that in a little bit. So to get to the first question that I like to ask, it's to frame around, are we, does the client value the flat fee or not, right? Because a lot of you are transitioning to value pricing, and you may have customers that don't value the flat monthly fee. Some customers want that hourly rate, and if they want the hourly rate and they're happy with the hourly rate, I wouldn't see why. It is possible that it'll be a more difficult conversation to have. So I think the best question to have is, how important is it to you that we give you a flat fee instead of an hourly rate? And another tip I'll give you, and this really comes from experience, is don't feel like you have to explain your questions, right? Just ask your question, be quiet, and wait for the response. So many times, and this happened to me very often, where I want to then later on go, wait, because I think the flat fee is better, blah, blah, blah. No, just ask the question once, wait for the response. So how important is it that we give you a flat monthly fee instead of an hourly rate? So you let the customer answer. And usually the customer says, yeah, I definitely want that. I want predictability. I want a flat fee. I don't want surprises. So right now they're telling you that they value that. And it's important for customers to tell you what they value. The whole trick around the value conversation is for the customers to tell you what they value, not for you to convince them on what they should value. Let them tell you what they value, and that's what you're going to be using to frame your services or to build your services around. So the other piece is I like to separate what's scope, what is scope versus service delivery. So scope, again, this is the actual work that we're going to be doing, and this is going to be the end result, we'll say the technical end result of the work that we're doing, where most accounting professionals are stuck there, where when they scope the work, all they think about is how many bank transactions, how many credit cards, how many checks, how many transfers, how many accounts in the chart of accounts, what's the annual sales. Most accountants think of the scope as the only option or the only element that affects the service. But I think that the service delivery, it's actually one of the most important ones. And we're going to get into the details of that, because this is how the customer will experience the work that will be done, right? Are you going to reconcile the bank remotely? Are you going to do it in person? What does that look like? Are you going to do it in front of them so they can watch you do the work and you can explain to them what they're doing? Or are you going to do it at 2 o'clock in the morning so next day, Monday, when they show up, it's done for them and it's seamless for them? That's what I call by service delivery. It's how they will experience the work that will be done. And most of the value is not in the scope. The scope, remember, the scope is what can be outsourced, right? The data entry, the categorization, that's what can be outsourced. The service delivery is really the only place where you can present uniqueness, right? You have two accountants equally qualified. They're probably going to reconcile the bank the same way. They're probably going to categorize the expenses the same way. They're probably going to understand what the vendors are the same way. The only way they can be different, it's how they do it from the perspective of the client. So let's move on to the conversations that we need to have with our clients that help us determine the value of both the scope options and the service delivery options. So we'll start with the overarching follow-up question. So what I'm going to give you is I'm going to give you a set of questions that are part of my questionnaire, part of how I put together my value conversations and then put together my pricing options. But I want you to keep in mind that these are 4 questions that you want to have in the back of your head that are the perfect follow-up questions once the customer gives you the answer. Because your customers will never say, XYZ service is worth 10,000 for me. The customers will never give a price, right? The point of the value conversation is to discover how much the customers value our work or the results of our work. But your customers will never be able to give you a price because value is subjective. But you can ask questions like, how valuable is X? How important is Y? How should we prioritize X versus Y? If you had to choose between X and Y, which one would you choose? So maybe the customer will not give you the specific valuation or the justification of value in a numerical way, but they can give you priority. They can tell you this is worth more than the other. So hopefully as we go through the questions, this stuff makes sense, okay? All right. So first question I like to ask, and I kind of ask this up front, is what is the type of work that you don't want to delegate to us, right? In other words, what is the portion that you want to do? So you always want to know what they want to do, because a lot of times we think that customers want us to do everything. And at the beginning, your customer will mention less things that they want you to do because they're trying to get the best price for your services, right? They're trying to pay the lowest amount possible. So they're not going to throw at you a whole bunch of things. They're actually going to try to frame it that their account is simple, that their account is easy, that there isn't that much work to do. Don't worry, it's just a couple transactions, right? That's how customers function, because they're trying to get bang for the buck when getting you to price the services. So I tell them up front, what are the things that you don't want to delegate to us? What are the things you want to do? And you write these things down, because it is important for you to know that the customer is actually committing that they're going to do it and that they don't want us to do it. Now, you know, as the accountant, that when they do some of these things, it's actually worse. So that's a conversation you have later on where you say, hey, we found that if you take over the deposits, that becomes a problem. I don't want you to take over the deposits, or whatever it happens to be. So that's the first question. I think is a great question to ask. It really just kind of sets up the whole conversation. The next, these are like the core questions that everybody already knows to ask, right? How many bank transactions, how many credit cards, who will enter these transactions, who will enter these credit cards, right? Which of these transactions you don't want us to enter. Let me just make a quick correction here. So which of these transactions you don't want us to enter that you specifically want to enter yourself? Who will classify these transactions, right? That's a really important one. Who will classify these? Do you want us to add additional information beyond what comes from the bank? That's a key question to ask. Do you need us to add additional information beyond what comes from the bank, right? Do you need us to read the memo from a check? Do you need us to add a class, a location, a customer job? Are you going to do that? So we're having these conversations up front. So we started to get understanding of the complexity behind the core of the accounting, which is the bank and the credit card transactions, right? Who will reconcile the loan balances, that sort of thing, right? So you ask these questions. These are open questions. These are not, do you want us to do this or not? You say, who? And your clients will say, no, you, or we'll do it. Or I don't know how to do it. Can you teach me? And then you can have deeper conversations about what your customer actually wants to learn how to do. Because, see, most customers feel that if they do the work, you will charge less because then you don't have to do the work. But sometimes they know when they don't know how to do it. So they will tell you up front, hey, listen, I think I want to do this, but I want you to train me on it. And of course, my business is accounting and training. So that's where the opportunities come along for training for me. Now, then we'll move on to like chart of accounts type issues, like who's going to create the initial chart of accounts? And your customer will say you. Remember, if the customer, anything the customer says you to, these are things that they're telling you that's valuable to them, right? They may come back and say, no, we already got a chart of accounts. This is what we have. And then they show it to you. And then at that point, you start figuring out whether or not you need to provide consulting around the chart of accounts itself, right? And you say, hey, would you like us to maintain this chart of account consistent throughout the entire engagement, which means we're going to have to delete, consolidate accounts as the new users start creating new accounts. Is this something that you want us to do? Or do you believe your chart of accounts will be this dynamic, living and breathing thing that's going to change along the way? And you also want to count on us to provide consulting around the integrity of the chart of accounts or how the chart of accounts should be changed as time goes by. The other questions I like to ask is, do you want us to include the open balances for customer invoices? Do you want us to include the open balances for vendor bills? Do you want us to include inventory balances? Do you want us to include prepaid income and expense accounts? In other words, this is accrual basis. But there a lot of clients are not sophisticated enough where you say, would you like cash or accrual? And they say, yeah, I know exactly what you're saying. I want accrual or I want cash. So this is the way I ask it so that clients understand, oh, okay. And then you say, by the way, that's called accrual basis. So I try not to get too technical with it. I think this type of question works really well. And then we move on to what I think are the most valuable sort of experience type of services that are not so much around the core accounting, which is, do you want us to create a budget and to give you a report on budget variances? Because anyone can create a budget, but can someone actually create a report on budget variances, which means you have to take a deeper look into how good the classifications are. Otherwise, the budget variance report will be all jacked up. Do you need us to create a forecast and monitor performance? Again, there's a difference between creating a document and holding someone accountable for tracking the performance of that document. So a big difference between creating a budget and reporting on budget variance. Big difference between creating a forecast and monitoring performance. What about, do you need us to create cash flow projections, right? Everyone wants to say yes to this, but they need to tell you, yes, I want that. It's important for the customers to tell you, yes, I want that. And then you follow up with, how important is this? Is this high priority, right? As I mentioned earlier, You want to, after they tell you yes, you want to say how important it is. Is this high priority? Is this high value? Is this low value? Very important for you to extract that information along the way. Do you want us to have monthly strategic meetings to review your financial goals and make sure you're on track that this is being met? That's another great question to ask in the sort of strategic aspect. Some of the other scope questions: do you want us to book the monthly depreciation, or do you want us to book annual? Again, let the client tell you, because monthly is going to be more expensive than annual. That means you have to do more work. And who will calculate this depreciation? Your customer may come back and say, oh, my tax person will do, I just want you to do my bookkeeping. My tax person will do that. Or, no, I want you to do it. Again, another area where they're telling you that that's valuable to them. Okay, let's take a quick pause to do a polling question, because we provided a lot of information all in one shot. So let's go ahead and ask a quick polling question. And while the polling question is up, I'll also look at the questions here. And let's say, somebody says, for monthly reconciliation, do you recommend up to 5 accounts? Some customers have 10 accounts or 4. So Virginia, I would say that because we value price per customer, you have to deal with as many accounts as they have. So I don't know I'm not sure if you're asking, do I recommend the to have a flat fee based on number of accounts? Remember, the pricing spreadsheet is going to change per customer. This is not a fixed fee for all customers. It's just a spreadsheet. You change the numbers afterwards. So I'm not sure, Virginia, what your specific question was. Hopefully I answered it somehow. So this is the polling question that's up, and it'll be up for another 30 seconds. What is the hardest thing about value pricing, right? Is it scoping so we don't work more than we're supposed to, determining the right price for their client, and communicating the value to our customers? So getting some good answers here. And we have 91% of the votes. I'll leave it up for another 20 seconds. Actually, another 9 seconds. And let's go ahead and close that poll. And I'll show you the result. So, so it seems to me that scoping the work so you won't end up doing more work than planned is the biggest challenge. And that's true. I don't have a magic formula for that. I think we're all in the same boat. I feel that that's also the most difficult thing for me. Do you need us to review your invoices you create every month? You need to ask that. Okay, it's not. Don't tell the customer, oh, our service is great, because it includes. Let me just make a quick spelling correction there. So our service is great because we will review your invoices. Ask, do you need us to do this? Because your customer may say, no, we got our invoices done. I don't have to worry about it. Then at that point, you're not even looking at them. And if something comes up in the accounting where there's a problem and it's related to an invoice, you can always go back to your conversation and say, you told us you don't want us to look at your invoices, so we didn't. Therefore, we left those balances open. So if you need some training around writing off invoices, that's something that we can discuss, and that would be separate from the engagement that we discuss. Another great question: do you need us to make sure that your customer payments are being applied to the correct invoices? Again, I can reconcile a bank all day long, bring in the bank deposits, but do I actually have to click one more step and make sure that the customer payments match the invoices? The customers can say, no, we're good to go with that. I don't need you to do it. I say, yeah, absolutely, want you to do it. Again, they're telling you that that's valuable to them. But then I will say, how important is it, or how much confident are you in your ability to do this correctly? And then they'll tell you what's valuable to them. You may have customers that say, I want you to check every single invoice and every single payment because I'm worried that my internal AR team screws things up. Then they're telling you that's high value to them, right? So that you're going to probably put that in a much higher service option. Do you need us to review your vendor bills? Man, I don't know why I kept putting 2 instead of us. Do you need us to review your vendor bills that you create every month? Again, same concept. Do you need us to make sure that the payments apply to the bills? Again, there's simple questions that evoke really nice conversation around what the relationship would look like. So if they have inventory, I say, who will track inventory? I don't say, do you need us to do it? because most of the time as accountants, it's very difficult for us to do it. So I don't say, do you want us to track inventory? Because that's opening Pandora's box to doing something that's very difficult to do and most people don't want to pay for. So I say, who will track inventory or inventory value? They'll say, we'll do it. And then I say, do you need us to help you do your physical counts? This is one of my favorite parts of the job, showing up on a Saturday to a client's warehouse to do a quarterly or monthly physical count with them. I absolutely love doing that. So when they say yes, I love charging for this service. I love charging more for this service. And clients that manage inventory is their lifeblood anyway. So they will be very, very, very happy to get help with physical counts. How often do you enter an adjustment to cost and inventory? So that would be if the customer is tracking inventory in a different system, right, where they have to bring in the cost of goods sold, inventory adjustment, that sort of thing. Again, this is all circumstantial, based on the client, based on the circumstance. If there are multiple companies, if there are intercompany loans, I ask, how will this be reconciled? I don't say who will reconcile it. I say, how will they be reconciled? Let them tell you what is in their mind, because they may say, I don't know, I need you to figure it out. And then at that point, they're giving you a lot of work, a lot of responsibility. And then you say, how important is it that we reconcile it instead of you reconcile it, or you provide us an intercompany loan schedule? They may come back and say, well, I don't have time for that. I want you to do it and then tell me what questions you have around it. And the customer will tell you what's valuable to them. So that's why I think it's important to frame it that way. Okay. Then we'll ask questions like, how will petty cash or cash on hand transactions be reconciled, right? Like, what document do we have to see money coming in and out of your cash on hand or petty cash? Let me see your petty cash log. If they say, no, we don't have one, but then you're looking at the history, they're taking a lot of cash withdrawals, you know they're going to need some training and putting together some sort of petty cash log, or you're going to have a lot of conflicts getting the data, the receipts, the information, and you may have this like long, deep discussions around, whether those withdrawals are deductible or not, and that sort of thing. So that's just really important to ask upfront, especially if the type of business does that. Do we need to meet in person at any point in time during the engagement? I asked that. Do we need to meet in person? And believe it or not, I found it that when you don't ask it, they assume that you have to, right? You are my service provider. We need to meet in person. I say, do we need to? If the customer says we don't, but it would be nice, then what they're telling you is, I want you to give me a price that includes it and a price that excludes it. And that's a really important insight, your psychological effect of the question. Do we need to meet in person during the engagement? And then if they say yes, how often? Or how important is it that we meet monthly? How important is it that we meet quarterly? How long do you estimate these meetings will be done for? So I know that's a tough one, because the clients will say, well, you're the accountant, you tell me how long my meetings are. And then you can come back and say, well, I usually only take about an hour or two to explain to you the monthly performance. But I found it with customers in the past that they want me to stick around for another 2 hours to discuss custom reports, to discuss areas of opportunity, to do budget, to do strategy. So generally speaking, if you want these meetings to include both my explanation of what we did and what your plans are for the future and our involvement and helping you keep track of that, I find that to be between 3 and 4 hours. And the customer will come back to you and say, yeah, that sounds about right. And then you say, well, how valuable is that for you? And they'll say, it's okay, or it's high value. And at that point, you'll know. And trust me, very close, we're going to get to the point where we actually put this together in a document and a price. Then I ask, who will manage payroll? Of course, if there's payroll, who will manage it? And then we'll get in-depth into, well, are there timesheets, are there employees, are there subcontractors? I think it's best to say who will manage it, because your customer may say, well, we use ADP, so I think we'll keep ADP. Oh, then that's fine. Then you don't have to deal with it, right? Or they'll say, no, we want to manage it internally, or we want you to take responsibility over, making sure that my forms are right. Again, these are key questions that help you understand what the customer wants. Same thing with sales tax, right? Who will manage sales tax? Do you require any specific or customized reports for management to use in a monthly basis? And this goes hand in hand with that monthly meeting where maybe we want to stick around for a couple hours just to kind of pull specific reports where you're trying to dig specific information, or maybe you're trying to build a dashboard, maybe you're trying to draw relationships, understand trends. So you just have to say, do you require any specific or customized reports for management use? Do you want us to bundle QBO software and apps, right? Or all these apps that we talked about with the monthly service? You need to ask that. Like, don't just offer to pay for somebody's QuickBooks Online file if they're completely happy paying for it. It's one of the things that drive me crazy about some accountants, that they say, well, we'll take over the QuickBooks Online payment and that's an added value. To your customer, it may not be an added value. For some customers, it's more valuable that they pay it because they feel that it's their service and their data. And for some customers feel that if they're paying QuickBooks Online through their accountant, they're paying through the service, that the accountant could somehow hold that information hostage, right? So that's another important value. Again, do you want us to? Again, this is all about the clients telling you what they value, not you trying to impose with them what they should value, okay? Would you like one price that also includes the income tax return? So for tax preparers, this is a great way to improve your cash flow. Instead of charging for accounting and bookkeeping month to month and then waiting for the year end to charge for the tax return, why don't you include the tax preparation in the monthly fee? That way you're getting paid basically upfront for the tax return. And when they say yes to this, then I add a follow-up question, which is, how often would you like to do tax planning, right? That means, when would you like to know how much tax you owe? Do you want to know it at the year end, or would you like to progressively know it quarterly? So if they say that, then there's value on adding tax planning as part of the element. What other software packages do you want to integrate into your QuickBooks? These are just very specific technical questions. Now let's switch over to service delivery questions. So these are the ones that are a little bit different. But actually, before doing that, let me take advantage and show you one document real quick, and I'm going to show you at the end how you can download this document. This is an Excel spreadsheet I put together, which I call the value matrix. And basically what it is, and I hope you can see it okay. Matt, if you're listening, could you just confirm that you can see my spreadsheet okay? Maybe he's not. I'm just going to assume that you can. Can you put in the questions box if you can see my spreadsheet? I just want to make sure that you can before I move forward. Okay, perfect. You can see the spreadsheet. Okay, so this spreadsheet I make available to my colleagues for free. So I'm going to give you a link where you can go download the spreadsheet. So this is just an example of how I take the same questions that we discussed, the same exact questions, and I put them in a spreadsheet, such as kind of like a checklist. So when I print it, let me just show you what it looks like on PDFs. So when I print it, it's got basically the same questions I plan to ask. And again, this is a spreadsheet. You can modify this however you want. And then I have a space for notes. So if there's some important notes to jot down, I do them during that client intake. But then this is really important. Notice that there is a box that says minimum requirement. So I put a checkbox there. The client said, this is an absolute minimum requirement, right? So it's not that this is high value or low value. This is an absolute minimum requirement. Like I can't have a service that doesn't include this, whatever that is, right? Reconciling bank accounts, modifying the chart of accounts, right? They'll tell you what to them is a minimum requirement. And then if the conversation made sense to do so, figure out if that was the highest possible value item that you can provide. Is it no value whatsoever, high value, or low value? And what you're going to do with that information as you start filling out this information, putting check marks, is you're going to be able to use this data to then construct your options. Remember, at the end of the day, what we want is we want to build a spreadsheet that looks like this, or it doesn't have to be a spreadsheet, it could be a Word file, a spreadsheet that looks like this, in where all of the items that you conversed are in a line item. Obviously, all the ones that are of any value at all, right? The ones that have no value, don't even put them here because you're not going to do them. So you're going to put all the lines of conversations that you had, and for whenever they told you something was high value, then you're probably gonna only include it in your highest option. If they told you it was some value or low value, you're probably gonna put include it or not on your lowest option, and that's even if it matters anyway. So those answers to those questions, right? Let me go back to the value matrix. Those answers to your questions that they're giving you, whether it's a minimum requirement, high value or low value, then are used to put together the package like this and to include it or exclude it in certain pricing tiers, okay? Yeah, so that's in a nutshell. I hope that made sense. I hope that made sense. I just wanted to take a quick break and just kind of add some framing around, what, like, okay, what do we do with all the answers to these questions? That's exactly what I meant. Okay, let's move on to the service delivery questions, and these are the interesting ones. These are the ones that I think most accounting professionals are sort of new to, or maybe they don't see as often. Now, just to be clear, this spreadsheet, the scope and the one where you put low value, high value, this one I'm going to make available to you. Okay. The one that I don't make available for free it's my this one, the colorful one, the options. This one I don't, because this literally took me 6 years to build, right? And there's a lot of intelligence, from my practice in here. So I actually sell this spreadsheet by itself. So if you want to buy it, I'll give you a link to just the spreadsheet by itself. But the checklist I actually make available. That's actually pretty simple to put together. Okay, so let's move on to the service delivery question. So one of the questions I like to ask is, would you like us to be available to respond to third-party contacts as your accountant on file as part of the engagement, right? So sometimes the customers say, I don't know what you mean by this. Well, this is what I mean. If your bank calls me to ask me a question about your financial statement, do I need to respond, right? Or do I need, or is it implied that after you give me permission to respond, that I can have a 10-minute, 20-minute conversation with the banker or the accountant or someone, or maybe an insurance agent, right? Do you want us as part of the engagement to not charge you extra, to be your accountant on file and answer those accounting questions from third parties? If your customers tell you no, you're specifically going to include it in your engagement letter that the client does not want us to do this, and that would be extra. That way they're telling you up front, they're accepting that this would be out of scope work. Okay. One of the things I remember, I heard a salesperson say this and it blew my mind. I think it was an awesome way to frame it, right? So if you're the type of accountant that would be okay with giving the client a discount for paying for the whole year up front, I love this question, right? So listen, would you prefer the flexibility of monthly payments or the savings from an annualized payment? I just love the framing of that question. Would you prefer the flexibility of a monthly payment or the savings from an annualized payment? And you're putting your client in two boxes. One is, well, I'm going to pay monthly and not ask for a discount. Or two, I am willing to pay for the whole year up front if there's a discount present. And you're already putting together, once you give a price and the client says, can you give me a discount? Can you give me a better deal? You say, yes, the discount comes when you pay for the whole year up front. And that's it. And that's how you frame it. And that's how you put a lock and a bow around your price and say, this price is untouched when you pay monthly, but there's an opportunity to save money when you pay annual. And this is great for cash flow, right? So you want to be able to do that. The other one I like to say is, how often would you like to have conversations with our bookkeeping team, right? Just beyond email questions, right? Beyond email, how often would you like that? So if they tell you never, they're giving you the fodder that you need in order to add it into your engagement letter, that we will not have phone conversations with the bookkeeping team. It will just be email. Again, if they tell you I would love to be able to talk to them once a month, and you ask them, is this high value or low value? And they say, yeah, it would be very valuable for me. Then you know you're going to have two prices, right? The one option where speaking to the bookkeeping team once a month or twice a month at no extra charge is included with the fee, and the one where you can't do it, that would be an out of scope service. How often would you like to have conversations with the accountant or the leading accountant? Again, let the customer tell you how they want it. Don't say we'll do it monthly. Let them tell you, because if a customer values a quarterly conversation the same as a monthly conversation, why spend extra time talking to the client where they're just as fine with a quarterly conversation? The other one I really like is, how important is it that we prioritize your engagement so we can work on it on the first week of the closing month? I'm not promising a delivery date. I'm asking, how important is it that we prioritize it for first week? And some of the conversations could be, well, what's the alternative? You can say, well, by the third week, by the fourth week. Say we actually price our services based on how quickly we get the work done. So we have a group of clients and a limited group of clients that we get done the first week, then a group of clients that we get done the second week, group of clients that we done the fourth week, and the fourth week, and so forth. The clients need to know that for them to get in queue of priority to get the work done faster, it's going to cost more money. Now, I'm not saying it in the question. I'm not implying it. I'm just saying how important is it, and they're telling you what's important to them. So I tell you, look, it would be nice if I could get it done the first week, but I'm okay with the third week. Then you know exactly what you're going to do. On the highest option, you're going to include first week delivery. On the lowest option, you're going to include third week delivery. I hope that makes sense in terms of how we put together the services. When you have a tax and accounting question, how fast do you expect a response from us? I find it to be one of the most important questions to ask. If not, that is the gauntlet of a question. Because if they say it needs to be within 24 hours or it needs to be within 48 hours, right? And you have to call me back. If they say that needs to happen, and then I come back and say, is that a minimum, again, is that a minimum requirement or is that just a high value component? And somebody will say, no, it's a minimum requirement. Then you know right off the bat that you need to address this if you just don't have the capacity to fill that. If you don't have the capacity to fulfill responding that quickly. And how would you like that response, right? Is it in writing? Is it as a memo? Is it going to be text, phone, all that stuff? The other question I think is a great question. What can we do or forget to do that would be an immediate deal breaker? What can we do or forget to do that would be an immediate termination of relationship? And typically this conversation comes up when they switching accountants and they tell you what the other accountant did wrong. So this is a really good conversation to have because you need to make sure that this becomes part of the value component. Okay. Other questions you can ask is, do you anticipate any major changes in the next 6 to 12 months? And how often would you like us to review the engagement to adjust scope and pricing? I ask, how often would you like us to review it? Because if the client says, I don't want to have a conversation about scope and pricing for at least 1 year, then you're taking the risk of the anticipated changes. Hope that makes sense. If the client tells you, I'm okay with reviewing at any time, then you can be comfortable giving a flat fee because the minute that something changes a month to month, you have the conversation with the client. But if the client tells you, I'm not comfortable with doing this every couple of months, I actually want you to wait a whole year until we talk about pricing again, then remember, you're taking the risk of all the changes that are coming in the future. And that's sort of the insurance model, right? That's the fixed interest rate model, right? You pay higher for a fixed interest rate because the bank is taking the risk that interest rates won't change that much in the next 30 years or whatever it happens to be. So that's a very important component because then you as the accountant is taking the risk of the scope creep change potential of the anticipation of changes to the business. I also like to ask, how often would you like us to proactively train and support your staff on technical issues of the software as part of the engagement? I like to ask, would you like a report? This is a very, very valuable one to some people. Would you like a report of what you did wrong and what we did to fix it? Don't just, some people are okay with you just fixing their work. Some people say, no, I want you to give me a report of what I did wrong and what you did to fix it. If that's valuable to them, you can charge extra for that. Okay? Would you like us to pre-negotiate a lower hourly rate for out-of-scope work? By the way, a lot of value pricing people are going to hate me for this, but I still have an hourly rate for out-of-scope work. I can't scope every single thing the customer wants me to do. It's very difficult, right? I got a letter from the Department of State. Oh, you know what? Let me call the Department of State. I took care of it. It's 30 minutes. It's done, right? I can't sit there and create a whole engagement for that. I would just simply charge, 30 minutes of my time. But what I like to tell people is, look, my hourly rate is $3.50 an hour, whatever it happens to be. When we work as an engagement, we can pre-negotiate a lower rate for you because you're part of our system, you're part of our service. So would you like that? Is that valuable to you? Some people may say, no, I'm fine. I'm never going to give you out of scope work, and when I do it, I'll pay the $3.50 an hour. Or they'll say, no, I think it'll be valuable for me to get a better rate because I'm your client, and then you can have those conversations. And once you start discussing the out of scope rate, then you can start discussing the potential out of scope situations, right? The other one I love to do, especially from a highest option, is, would you like us to include a set of hours for out-of-scope work as part of the engagement? That way I'm not worried about out-of-scope work. So I'll have an engagement where I build up a couple $100 and I already include 4 hours of out-of-scope or 2 hours of out-of-scope work. So I'm getting paid for that time anyway. So I'm not worried about out-of-scope work. So you pre-negotiate that as part of your engagement. Now, would you like us to guarantee our work in such a way that we need to include audit representation, right? Do you need that audit coverage to go beyond 3 years? You want it to go 7 years. If they're asking you to include audit coverage or audit representation, that's part of a premium, right, that they're going to be charging. Would you like us to have a portal for you to be able to retrieve all your documents on demand, right? And if we disengage, how would you like those documents back, right? That's all part of the fee, and I'll show you with my spreadsheet. The last question I ask is this is usually the last question. Right? This is the last month. How important is it that we guarantee our work in such a way that if you're ever dissatisfied for whatever reason, we'll refund you the last payment and we'll have a clean break, no questions asked. Again, how important is it that we guarantee your work in such a way that if we're ever dissatisfied, we refund the last payment and have a clean break, no questions asked? I find that to be a very important question. Let me run the third polling question. And after this polling question, I'm going to show you how to download some of the resources that I have available. And I really, really hope that this information has been useful. I know you can't win them all, so some people will feel they didn't learn anything new, and the ones that do, I'm really happy that it is. Okay, let's see. So I'm going to give you. That's a good. I have a really good question here. Is do you send a client an email with those questions so they can prepare for it? You know what? That's a really good question. I did it a couple of times at the beginning, and I realized that our customers were overwhelmed by it. So I learned that I save these questions for myself for our meeting, and I also don't ask all of them. Right? Sometimes the circumstance and the conversation will drive me to skip some of these. So when you give somebody a questionnaire without understanding them, you're going to give them extra questions, and people get kind of fed up around that. So I decided not to do that. I did create a video, that has all the questions, and I asked my clients, hey, would you like to see my sales process? And I just show them a video, which is basically a video, a recording of a webinar, kind of like this, so my customers see what is it that I ask. But I mean, if you adapt this process, all you have to do is send them to my video and say, hey, I do the same thing Hector does. Check out his questions. I'm going to ask you the same questions. That's totally okay with me also. But I wouldn't send a questionnaire. That's my take on that. Let me close the poll. And for 80% of you, this was helpful. So that's great. I'm really happy about that. Okay, so let's talk about the additional resources. So before we do that, let's open up this template. So this is the template that at the end of the day, it's how I present my services. Notice that I use check marks to include what's included and what's not included. These mimic the questions that I asked. Notice that on the things that I don't cover, and this is actually kind of an important one, on the things that I don't cover, I tend to give me one second. Okay, I tend to write the fact that I do them, but maybe only annually, right? So for example, on my first level service, I don't manage receivables, payables, inventory, none of that stuff, but I will make the annual adjustment. So I also don't like to leave a lot of blanks because I don't want the client to feel that we're not doing any of that work with the first service, and we're saying that we're not managing in a monthly basis. I also price upfront here the optional thing. So if the client wants a monthly meeting, which they don't get with my first service, they can pay for it for $750. So the client wants payroll, which they don't get with my first service, it's already pre-priced. So by pre-pricing upfront, I'm making it very simple to transact with the client in the future. Okay, so I add those things in there. I have a box for additional notes if I want to add additional notes. And my spreadsheet, the way it works, notice I can collapse it So I only show the first the highest option, and that's kind of an important trick. You always want to, once you talk to your client and put together a package, you always want to display the first option first. So I print this and I tell my client, by the way, I'm going to show you 3 options that I gave you, but I'm going to give you the one that I think is going to have everything that you need. So you always start with this because this is your anchor. So it's extremely important that you start with the first option, print this one first, right? And say, this is ideally best case scenario. If I can do everything we talked about, that's possible. This is what I would do, right? So I would print this by itself, the highest option by itself with all the options, service delivery and scope options. Let it sink in. The client may think it's too expensive. That's okay. That's okay. It's okay for the clients to think it's too expensive because this creates the anchor. And then afterwards, I'll open it up and I'll show the one with the 3 options. And then let the client know that they're paying less because they're getting less. Let the client understand that in their mind that to get more, you have to pay more. But in order to do that, you have to show the first one first and say, this is what I would love to do for you, but let me give you some alternatives just in case we want to move to that eventually. So always assume that the customers will move to that at some point. You're not selling them something that they don't want. You're selling them something that is not the right timing to sell them something. And that's the frame around it. Say, look, eventually this is what we're going to be doing. All my clients after a year or 2 move into this 3rd option. They do it because they want it, because they get value, they make more money, they take more vacations, they feel they have more control over their business. All of our clients eventually, within a couple of years, they move to that. So I'm not saying that you have to do it now. I want you to see it so you understand it, but then I want to give you options just in case you want to start with a lower scope service, and then we can move into that. So you always make the assumption of that. A question I get this question all the time is, how far should the range be from the low option to the highest option? So typically what I do is I put in the middle price what I ideally want from my customer, and then I make the highest one. Notice the formula, I don't know if you can see it. I multiply it times 2 and then take away 10%. So I make it almost double. So I multiply the middle one times 2 and then multiply it times 0.90. So it's almost double. And then the lowest one, usually what I do is I divide by 2. And so I divide this by 2 is the most typical. I divide by 2 and then I multiply times 1.1. That's typically what I do, more or less, formulation wise. So whoops. So it usually turns out to be a little bit more than half. So the lowest option is a little bit more than half of the middle option, and the highest option is a little bit less than double. Now that's not a rule. That's how I do it. You guys will find ways to do this on your own. Now notice the service delivery options, some of the examples, right? So response time. I give different response time services based on the tier they're in, right? If they're the higher tier, I'll respond within a day. If they're the lowest tier, I'll respond within 5 days. If they're the highest tier, I'll include 100 hours of audit representation, right? If they're on the lowest tier, I will pre-price for $250 an hour audit representation. If they're in the lowest tier, I will charge you $150 to give you all the documents back at the end of the engagement in a USB drive. If they're in the highest tier, you will have a portal and everything will be digitalized and everything will be available for you forever, right? Whatever happens to be. If they're in the highest tier, I'll give you a satisfaction guarantee. No questions asked. I'll refund your money. We part ways. If they're in the lowest tier, there's no guarantees and it requires 90 days to cancel. So that's kind of it's just very interesting. You can get really creative in how you put these things together. And trust me, that those service delivery options, which is how the customer experiences your work, it are the biggest components of value. Now, if you look at this last slide, if you go to my website, hectorgarcia.com/value, you will have access to a couple things. So first thing you will see on the website, and this is all free, right? You're gonna see my value pricing guide. Let me zoom this in. My value pricing guide, which is a PDF where I kind of summarize this whole thing into like a 2-page PDF. It has the questions. It has a couple things. Here it is. Actually, no, this is the long one. Sorry, this is my long one. It's a 36-page guide on value pricing. I get pretty in depth. It's kind of an ebook. You don't have to sign up with your email, anything like that. I kind of go really, really in depth on my philosophy about value pricing and how I add apps to that. Then the value pricing cheat sheet is the one that I was referring to. It's a 3-page that kind of has all the questions in a single page, just like a 5-step formula. And, on how I do this, I talk about the types of service delivery options and all that stuff. All that stuff is in there. That's available for you to download. Whoops, I closed that. And we're gonna run the last polling question in 1 minute. So just give me a chance. And then you're gonna have the options, the value priority matrix worksheet, which is that spreadsheet that I mentioned, which is basically putting the questions in a format where I can add notes and low value, minimum requirement, high value. So all those things are available for you to download. There's also the client intake questionnaire. Also, again, something that I feel I'm a little bit over generous at giving away, because this is something that has taken me years to put together, right? This is a questionnaire. If you're the type of person that wants to ask it in like a questionnaire format, that's all pre-set up there for you to capture. And it's slightly different than the presentation, but that gives you an idea more or less of ways. And you can change this however you want. So that's the free resource. If you go to this website, that's there in the middle, quickbookstraining.net/pricing template. And let me copy and paste this in the chat, just in case that's what you want, where I just sell the template, just the template, for $50, right? And I've sold already like 80. So I'm actually pretty happy that people pay $50 for a spreadsheet. I love it. It's been useful. Everybody has raved about it. It's if you want to, you can build this on your own. You can go back, watch this webinar, build this on your own. But I have a feeling that this will save you a lot of time to just take mine and modify it. And lastly, exactly in 2 weeks, I will have a value pricing course for 3 hours where I go more in depth. I call it, it's sort of the level 2, where I go really, really in depth on constructing the spreadsheet itself, how to modify, how to change it. Kind of just basically a demo on how I put together the spreadsheet. I show you one that was put together already. And that's going to be on November 2nd, 2018, 12 o'clock Eastern for 3 hours. And if you want to sign up for that, go to valuepricing.net. It's $250, but there's a coupon of $50 off that expires today. The coupon code is CPA. So go to valuepricing.net, $50 coupon code. Let me run the very last polling question, and I'll also take a look at the outstanding questions because we're in top of the hour. So if we made it right on time. Okay. So let's see. Question from Michael, do you value price every client individually? Yes, that spreadsheet is meant to be modified for every single client, right? So that's a really important thing. So tax clients are a little bit different. For the volume stuff, like a regular 1040 is with a Schedule C where I did the bookkeeping all year long. For that sort of thing, I probably will have a fixed fee already pre-set up. But whenever it's a more complex type of situation, then I probably just value price it by itself. Yeah. Bye, guys. Thank you very much.